All right, I'm ready. I got my hands ready.
All right. Hey, we're back here with Dan Laver, and he's going to give us a mortgage update. By the way, I want to compliment you. Last month, you had your predictions, and you are right on. I'm hearing things out there that we may see a little rate cut here in September of 2024. What can you tell us?
Absolutely. Yeah. So, two major things happened in the meantime since we talked. Rates getting lower. So, we had our CPI come out, and that is what the Fed is using to track inflation. Last Thursday, so that was, what is that date? That was exactly on the 11th. We saw CPI come in very strong and on track with the Fed's goals. If this trend continues, along with other reports coming out, like retail sales report, other things that influence treasury bonds, if we continue to see core CPI on the track that it's at, then I definitely think that we're going to see those scheduled rate cuts, which we are dying for. And from riding on Thursday's wave, we are still in a good spot on a 2-month high. So the last 2 months rates have been going like this, but remaining relatively stable in the same area. Now we're above those levels. So we're just hoping that this momentum can really bring us home into September's rate drops.
Awesome, thanks. Hey, I want to play something from Barbara Corcoran and get your opinion on it. All right, so let me share my screen here.
Sounds great. Let's do it.
See if you might agree with this.
Okay.
I can't explain the rates going up or down. That's not my bailiwick. But what I can explain is if rates go down just another percentage point, that's what I'm hoping for by year end. Prices are going to go through the roof.
Now, what do you say about prices going through the roof? Do you think that's likely to happen, and why? I mean, I know you're not a realtor, but you work all day with us, and you know exactly what's happening when rates adjust.
For sure. I think it's going to open up more people to becoming qualified. A lot of us are looking at the market. We're thinking maybe are we going to have a 2008 again? A lot of homes are coming on the market and not selling. Ultimately, though, when you have a full interest rate reduction, what you're going to do is open up the gate of affordability that some people might not have been qualified for at, let's say, 7%, but they're qualified at 6% because it's about a $500, $300 difference in payment. So with that being said, I do think that she will be right, that more people are going to enter the market. And David, as you know, when you have multiple buyers bidding on your listing, what's going to happen to the house price?
Yeah, right up there on my board. I've got 3 that are in that battle right now. And then I've got 1, 2, 3, 4 sellers that if rates drop to 6, they're probably gonna sell and buy. And
exactly,
it could be another market where it becomes real competitive for the buyer, and you know, we'll see. It's hard to say exactly what's going to happen, but
yeah, it depends if they're saving, it depends if they're building their credit or if they have a promotion coming in down the road. Another huge thing too is that sellers also want to have an affordable interest rate. So when they're moving and selling at the same time, they don't want to have a 7%, whereas 6%, where their payment's lower, they have access to buy it down into the 5s. I mean, that's a huge incentive for sellers too. So not only just for buyers, but for sellers. So I think we're going to see possibly more inventory come on the market as a result from it, from people wanting to enter in and sell their property and upsize and take advantage of that 25% gain that we've seen in the last 2 years. And then on top of that, we're going to have people qualifying for loans which they didn't have access to before, along with all the people waiting on the sidelines to jump in since they saw interest rates lower too. So I think it's going to be a good cycle for real estate if we stay on track with where the Fed wants to see inflation come in. If we get as close to 2% as we can, then definitely I think we're going to be seeing a lot more action happen in September. And it's my birthday in September, so that'd be the best birthday present for me.
Hey, before I let you go, I've had a couple clients ask about the junk fees they're starting to see in this, like mortgage junk fees. Can you explain that? Because it's a little confusing. Can you give us a one version?
Yeah, so a great example of what they're trying to do with what we call junk fees, and these are fees that, we don't really need to charge, or we don't feel like they need to be charged. A good example of a fee that is probably called into question is what's called a sub escrow fee, where you have a different escrow and a different title and they charge a fee to intermingle with each other. That could be seen as a junk fee. Other fees that we're also seeing that are in the news is the title insurance policy, where if somebody's refinancing and they already have a title insurance policy, why are they paying for a new one? Isn't the loan already being insured? And so what they want to do is see that policy just transfer over to the new lender since it was already paid for. Doesn't make sense to refinance and change your homeowner's insurance premium when you already have homeowner's insurance. Why have new title insurance if it's already there and existing and in effect? So that's what they're looking at, and they're trying to scrutinize it more. And they really would just want to make sure that when you're buying a property, we don't want to see all these fees tack on to the buyer or the person refinancing their property. And they just want to have them pay for very clean fees that get the job done instead of increasing them just to make more profit.
Yeah, so it's kind of like smogging your car in California. Like, if I sell my car today, in 91 days I have to re-smog it.
Yeah,
every 2 years. You shouldn't have to re-smog it just because you sold it. I think it's 90 days. It's like 3 months. You have to get a new smog.
Yeah, we can just buy a Tesla and avoid that problem now, right?
Yeah, we got one, but I get flack on both sides for that. So I do have gas and electric. But hey, Dan, how do they get a hold of you if they have any mortgage questions?
Yeah, I think the best way to follow me is to go and find me on Instagram. It's Laver Lens, LAVERLENDS. That's the best way to get a hold of me. I have really great educational content on there. And all around, if you just are looking to get in contact, shoot me a DM.
We'll be back in touch in August. Make sure you like and subscribe to this so you get our latest mortgage updates from Dan, and we'll see you next time. Thanks, Dan.
Hey, thanks, Sam and Dave. Talk to you.
Bye-bye.